Good day, everyone, and a warm welcome to Ester Industries Q1 FY19 Analyst and Investor Call. We have with us today Mr. Arvind Singhania, the Chairman, and Mr. Pradeep Kumar Rustagi, the Chief Financial Officer. We will begin this conference call with opening remarks from the management, following which we will have the floor open for an interactive Q&A session. Before we begin, I would like to point out that certain statements made in today's discussions may be forward-looking in nature, and a note to that effect was stated in the Concall invite sent to you earlier. We trust you've had a chance to go through the financial presentation sent to you earlier. I would now like to hand over to Mr. Singhania to make his opening remarks. Over to you.
Thank you, Gavin. Good afternoon, everyone, and welcome to Ester Industries Q1 FY19 earnings conference call. I will discuss the key operating highlights, post which Pradeep will run you through our key financial highlights for the period. We have started the new fiscal on a positive note, driven by improved performance across all our businesses. Improved performance of the film business, the dominant of all the three, drove bulk of the overall revenue and profitability growth for the quarter. Film business continues to benefit from the overall supportive macros following the attainment of demand-supply parity. Realizations continue to remain firm, which in addition to the steady demand has been driving revenue growth at a steady clip. Further, our attempts towards improving the product mix by focusing on value-added products are helping us maintain the revenue momentum. We are also witnessing improvement in the margin profile of the business, which is aiding the overall profitability. As mentioned in our previous calls, we are working towards increasing the share of value-added products in the overall mix. Moving to the specialty polymer business, we saw steady improvement in performance. Some of the volumes we penciled in for the year have been pushed back. Given the customers' appreciation and acceptance for the products, we are hopeful that offtake would resume in the near future. This business, as you know, is largely innovation-driven and mandates certain degree of patience. It is yet to reach a scale wherein we would be comfortable and confident in terms of providing quarterly guidance in terms of volumes. We are developing innovative products which involve large degree of back and forth, tweaking of products midway to meet the client's requirements before seeing the final go-ahead. Some of our marquee products have been well received by customers, and we are optimistic about ramping up the production soon. Margin profile of such products and this business in general is extremely rewarding compared to the other two businesses. We remain confident that the overall business and profitability profile of this business will undergo a massive transformation once the specialty polymer business performance grows to its potential. As far as engineering plastics is concerned, the quarter continued to see a steady performance with revenue growth of 4%. Our strategy for the engineering plastics business is on similar lines to our film business, wherein focus is towards improving the share of value-added products in the overall mix. Lastly, in addition to the above, we are also undertaking stringent cost rationalization exercise in an attempt to eliminate unproductive expenses. We are hopeful the exercise will help contribute positively to the business overall profitability going forward. With that, I hand over the floor to Pradeep, who will run through the financial performance. Thank you.
Good afternoon, everyone, and thank you for taking the time out for our call. I trust that all of you have received the investor document circulated by us earlier. Let me quickly summarize the key financial highlights for the quarter, following which we can begin the Q&A session. Starting with the top line, our revenues for the quarter stood at rupees 227 crore as against rupees 205 crore, higher by 11%, driven largely by strong performance of film business. EBITDA for the quarter stood at rupees 27 crore as against rupees 16 crore generated during Q1 FY18, higher by 69%. Higher revenue growth coupled with focus on cost helped in delivering higher margins. Finance cost for the quarter remained steady at rupees 8 crores. Our total interest-bearing debt as of June 18 stood at rupees 290 crores, resulting in debt EBITDA multiple of 2.71. We are working on ways towards lowering the debt and are targeting lower levels by 2020. Depreciation for the quarter stood at rupees 8 crores. Profit after tax for the quarter stood at rupees 7 crore as against loss of rupees 13 lakhs reported during Q1 FY18. Moving on to segment-wise performance, film business continues to perform well, aided by steady demand and realizations. The business fundamentals have changed for the better following the demand-supply parity and should help us in maintaining the momentum in near terms as well. Further, our attempts towards improving the product mix by increasing the share of value-added products should aid profitability and revenue growth. Especially polymer business had a steady performance with revenue and EBIT of rupees 8 crores and rupees 1 crore respectively. The business is picking up gradually, albeit at a pace slower than anticipated, but we are hopeful that business will start performing close to its potential in near future. Engineering plastic business reported yet another steady quarter with revenue growth of 4%. Our strategy for the business, as mentioned by Mr. Singhania earlier, is similar to film business, wherein our efforts are directed towards increasing the share of value-added products. To conclude, I would just like to state that improving fundamentals of the individual business bodes well for the future. We believe we are well placed to deliver a steady performance going forward. That concludes my opening remarks. We would be happy to answer your questions now.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yeah, good afternoon, friends. Thank you for the opportunity. Sir, firstly, sir, what has aided to this very good set of numbers, especially in the polyester chips and film segment? Is it the price rise we have seen or the lower inventory we had earlier? How should one read into these numbers and the continuity of the same for the polyester chips and film segment?
Well, largely, these numbers are arising because of reaching demand-supply parity in the polyester film business. Till last year, there was an overcapacity which was putting pressure on the margins. Polyester film is experiencing very strong growth in demand at about 12 to 14% per annum. No new capacities have come in the last year and a half or so, and only one new line is expected by middle of next year. With 12 to 14% demand growth, we expect the supply-demand parity to be maintained in the next few years. And therefore, this is what is largely aided in the prices and the margins firming up. That is the main reason one can say that for the improvement in the polyester film business. Apart from that, we have been working on converting more and more of our commodity business to value-added products. This has been the second aspect which has aided in the improvement.
Sir, if we come to the polyester chips and film segment altogether, there has been value additions also with this segment also?
Yeah, so we have a value-added product portfolio within the polyester film segment.
Okay. If you give the mix, sir, how much value addition out of the total turnover?
FY18 was about 20%.
Yes.
Yeah, it's about 20 to 22% right now, and our target is to take it up to about 35% by FY20.
Okay, sir. And is it mainly catering to the textile industry as a whole, or other than?
No. It is largely packaging.
Packaging industry the largest share is towards the packaging industry.
I mean, polyester film is almost packaging. There's nothing. There is a small bit that goes for textiles, the zari yarn.
Okay.
But largely it is all flexible packaging.
Okay, sir. And so this one-time plastic ban part also, does it provide any sort of comfort or attraction to our segment, to the packaging industry as the ban on plastic or the single-use plastic has come into force?
See, the ban on the plastics is basically towards the one-time use plastics. Right. That is where the authorities are focusing at. For example, plastic straws, plastic cutlery, plastic trays, plastic spoons, plastic glasses, etc. Plastics used for packaging comes under the manufacturing process, which is exempted from this. So we are not hit by this plastics ban.
Correct, sir. And it is the main growth is led by all the consumer durables. I think the FMCG, the fast-moving goods only that are leading to your growth.
Absolutely. I mean, if you want to know our growth, follow the growth of FMCG.
Right, sir. That is directly proportional. Now, sir, I would like to come to the raw materials. Sir, how has the raw material basket played out for this with this quarter, and how have the constituents, the prices behaved for this quarter, and what's the outlook going forward?
Raw materials have strengthened over the last couple of quarters. Prices have gone up because of crude going up and also because of demand-supply change in the PTA paraxylene areas. But despite the prices having gone up, our margins have improved. So that means we were able to push through the increased raw material prices plus an additional margin improvement was also there. Largely in our business, raw material pricing has very little effect on the margins.
So there is a complete pass-through there. Sorry to interrupt.
Sorry, it's a complete pass-through. It's a complete pass-through.
Right. You were telling something, sir. I just interrupted you.
Yeah, so basically, the margins are decided upon the demand-supply situation of our of polyester film.
Right. Sir, the major constituent, I think, is the MEG also in the raw material basket.
Yeah, MEG, PTA are the two constituents.
Right, sir. So how have the MEG prices been, sir, of March to June quarter, sir?
March to June quarter.
March 18, March 18 to June 18 में क्या change?
So March quarter, we look at the PTA MEG per kg of chips or film. It was about 75 rupees 74 rupees in March 18. Now it is about 78, 79 rupees in June 18 quarter. Since then there has been increase. Currently it is 83 rupees.
Okay, and if we take particularly MEG prices, sir, how have they moved over the quarter?
It has not increased so much as PTA has increased during the quarter.
Okay, could you quantify, sir, for the MEG prices and the PTA prices separately?
I'll just give me a minute. You ask another question. I'll give you.
Now, sir, after this, I will shift towards the specialty, the engineering plastic part, sir, because that has been the laggard for this quarter. And sir, just for investor continuity, sir, is the business environment conducive enough for us to post these kind of numbers going forward, also barring unforeseen circumstances?
Well, barring unforeseen circumstances, we would expect the rest of the year to be as good or better as far as polyester film business is concerned, for sure.
And so we are running 100% for the polyester sheet segment?
Yeah. Well, practically speaking, yes.
Okay, it is 100% there. And for the specialty chemical part, the wait is getting too long, sir. When are we going to see the results on ground, sir? When the conversion will happen, yes, sir. That is the point.
No. You see, I can understand your frustration, and you can imagine our frustration because we've been working on this for a very long time, and it always seems that it's hit off, but something or the other happens and it gets pushed back a little bit. But I don't think the wait is going to be too long anymore because we're not only a one-product company in specialty polymers. We have a lot of products in the pipeline, and we are very hopeful that within the next very short period of time, we should start seeing some results. Very good. And,
sir, one thing with the Berkshire company also, we have done one contract. That has remained valid or that has been nullified? I missed the point. We did some agreement with that Berkshire.
No names. ऐसा है that there was some volume indication given in the beginning of the year but that has been pushed back a little bit for some reasons, which we are not entirely sure what the reasons are. Certainly not quality, but there is a little bit of a pushback on the timing. So it's a little bit open-ended at this stage. But despite that, we are working on many other products, and specifically two products where we are very hopeful of concluding some good business in the next, for one product in the next few weeks and the other product in the next 3-4 months.
Okay, sir. And this is with pertaining to Berkshire Hathaway only or an other client you are talking to? Berkshire
Other.
And the contract with them, sir, is this pending enough or there is no traction on that? There was some noise about it, sir, earlier.
Yeah. The volume offtake has been pushed back, like I said.
Okay, but still the order pertains there, sir. We will be delivering the.
When the pushback has taken place on the offtake, the question of contract doesn't arise.
I did not get you, sir. Come again, sir.
Please, the volume of MBO3, which we were expecting to do this year, was pushed back. So we have not really had any large volume that we were expecting on MBO3. Okay. We are waiting, and there'll be more clarity over the next 3-4 months.
Okay, sir. And lastly, sir, what is the application of MBO? Sir, where is it applied? Just wanted to have an understanding.
For stain resistance to nylon carpets.
Stain resistance to nylon carpet. This was the one they were looking forward from you, the polymers. This was the product. Hello?
Yeah.
Okay. And sir, do you have the prices now, sir, for the MEG, and then I'll come in the queue, sir?
I have June quarter prices. The March quarter, I don't have the file.
No issue, sir. What are the MEG prices for the? You get it later on in the call.
MEG prices, June average is about 69 rupees. Only to us.
69.
It was 69 rupees. And
okay.
PTA average is about 61 for the June quarter.
Okay. And how have the prices moved, sir, for July and August?
They've gone up. Current prices are higher than this.
They've gone up.
No, 83 was the cost you were telling, sir.
Yes, right now from 75 it has gone up. From 78, 79 it's gone up to about 83 currently.
No, but you gave 69, 61 the prices. So where is that 75 gap?
That was MEG, my dear sir.
Okay.
Cost per kg of film.
Right. Sir, I'll come in the queue, sir, and listen to the other speakers. Thank you.
Thank you very much. The next question is from the line of Aman Suntalia from AK Securities. Please go ahead.
Sir, what was the spread in the poppet film in the average spread in Q1 and what is it right now?
The margin, you mean the value addition?
The poppet.
Yeah.
Normal poppet film, yeah.
So, in June quarter, the non-metallized film, the value additions over the selling price and raw material difference was about 45 rupees in June quarter as compared to 41 rupees in March 18 quarter.
And what is right now, sir?
In the same region of about 45 rupees.
45 to 46 rupees.
46 rupees.
45 to 46 rupees. And going forward, it is going to be better.
We hope it will be better. Actually, it would have been better right now, but we got hit by this huge transporter strike. 10 days, transporter strike really hit us very badly. And then we have this Kavadia problem in North India. So basically, July was a bit of a disappointment because of these issues. But we're seeing demand pick up because now we have a very good season coming up. Diwali season has started for us.
Yeah. Okay, sir. Okay, thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to join the question queue. The next question is from Santosh Pajare, who's an individual investor. Please go ahead.
Yeah, hello, sir.
Hello.
In this, my question is regarding the specialty polymers. Yeah, last quarter, we had a guidance. I saw you commenting saying specialty polymers would do around close to 120 crores for the year. Yeah. So approximately it should be 20 to 25 crores in a quarter. But the specialty polymer business has done only 8 crores this quarter. Any root cause for this or any analysis for this?
Yeah, like I said earlier, some of the volume that we had penciled in for this financial have got pushed back. So that is the reason why we have not been able to do that volume.
Okay. It's been pushed back or it's been drawn back, like cancelled, or it's been pushed back?
No, it's not. I wouldn't say it's completely cancelled. It's a pushback. And
okay.
That's what we've been told. And again, like I say, it's not because of any quality reasons for sure, because the product continues to be we service other customers with this product, and the product is moving well at the small volumes with the other customers. So it was not because of quality or anything. It was their internal decision to push it back, and therefore we've not been able to. We will wait and see what happens in the next few months from the larger customers.
Okay, and there are different approved patented polymers also. So are we in talk with different other customers for long-term agreements kind of stuff?
Yes, like I mentioned earlier, you see, we are not a single product company in specialty polymers. We do multiple, we got a big, strong pipeline of products. and we have some very strong products which are under discussions, which we hope to close very soon, in fact.
Okay.
Yeah. And there'll be good margin, good volume products.
And the tonnage factor would be the same as the earlier agreement, or it should be lower?
So tonnage will be higher.
Okay, tonnage will be higher, more than 2,500 crore, 500 tons?
Yeah.
Okay. Thanks a lot. Yeah.
Thank you. Next question is from Mitul Mehta from Lucky Investment Managers. Please go ahead.
Yeah, sir. My question is pertaining to this particular contract, which was announced by you about this particular supply to the customer. Now, when you enter into certain contracts, there are certain fixed supplies which we have to deliver to the customer based on certain timelines. Now, when you say that I have pushed the volume, means internally we are not pushing the polymer with the customer. So does that mean that there are certain liabilities or penalties in the contract which we have to?
No, it was not a formally signed contract. It was an indication. It was a forecast given by the customers, according to which we were to supply, and we'd already started supplying. When I in January when I spoke to you and made that announcement also, I said it is we've already started supplying material based on the forecast. But for some reason they've decided to hold back for some time. I don't know why.
So how big was this particular order for us? I mean, in terms of tonnage.
Annualized, it was supposed to be in the region of about 2,000 to 2,500 tons. So about $12 million, $13 million a year.
Was it a multi-year contract or how was it?
It was supposed to be a continuous contract. Not a contract. Again, I would say it was not a signed contract. It was a forecast given by them.
Particular product, right?
Sorry?
Was it for one particular product?
Yeah, one particular product.
Now, I mean, let's assume that, you seem to have pushed it back and don't want to pursue with this particular supply. So what is the roadmap going ahead? Let's say over 2 years. So means the guidance given by you earlier, do you still stand by the guidance or you think, it takes some more time and maybe it'll kind of unfold over the next 2-3 years?
First of all, we have not pushed back the supply. The customer has pushed back the supply. So it may come back. We don't know when, but it may come back because the other customers continue to buy the volumes. In fact, now indicating increasing volumes slowly. This was a big one. They were very keen. They started taking supplies, but for some reason they said that we want to push it back. We want to hold it for some time. So it may not happen. But as far as the turnover that was given to you was based, if this contract, if this volume were done with this particular customer, which is not going to happen in this year, at least not bulk of it. Therefore, the guidance as far as the specialty polymer business is concerned, coming out of this business is going to be lower, much lower. But as far as the specialty polymer business per se is concerned, we are still extremely positive about it because we have other products in the pipeline which have been undergoing trials and tests for the last 2 years. Concluding some very good, at least 2 contracts in the next, one in the next few weeks and one in the next few months, which will start delivering very good business into the specialty polymer area.
Also for the similar stain remover product, or these are different polymers?
No, very different.
Would they kind of, so whatever you sign, will they kind of recoup whatever loss you of the first customer?
Yes. If individually they are capable of recouping and the kind of bottom line we were expecting from this particular last customer.
And coming to your other segment, what is the outlook there and how do you see that panning out over next 12 to 18 months?
Well, like I said, our polyester film business is doing well. We have reached a demand-supply parity. and we expect the business to improve over the coming, I think it will be very good business for the next couple of years or 2-3 years, because no new capacity is expected except for one line coming up in the middle of next year.
What sort of volume growth can we estimate there?
Sorry, say again?
What sort of volume growth can we estimate there? Can we envisage?
Yeah, so domestic demand is growing at about 12 to 14% per annum in polyester film business. Local demand out 420,000 tons per year currently.
And balance the export, the Indian manufacturers.
So this demand is expected to grow at about 12%. So you're talking about 50,000 ton per year growth in demand in polyester film.
And that is the growth the FMCG sector has reported, as you read in the newspapers, the Hindustan Lever, Dabur, etc. They are showing volume growth of about 12%.
So if you want to know the growth in demand for polyester film, look at the FMCG numbers. You know our growth.
For ourselves, for Ester Industries, I mean, what sort of volume growth are we estimating? I mean, we will grow as per the industry, or we will grow higher?
You see, we are limited by capacity today.
We have constraints.
We are running at flat out. We don't have any more capacity available. Now, if we want to increase, we have to put in a new line, which we will look at putting up in the next, we'll take a decision on the new line in the next 12 to 18 months.
How much investment would go into that line?
Say about 250 to 300 crores.
How do you plan to fund this?
No decisions have been taken as yet. We'll see how we're going to do it. Of course, rest assured on one thing, that it will not be a over-indebted funding.
And we're at of internal accrual.
At some point in time, we will have to come to the market.
We'll see. It depends on how when we take a decision. At that point in time, we'll see what kind of funding is required and how to do it. I am giving you one very clear-cut indication that it will not be a pure debt-funded thing, so that we will not allow Ester to be caught in a debt trap.
But actually, what I'm trying to understand is that your specialty polymer and your engineering plastic business hardly throw cash at this juncture. Maybe 1 or 2 years down the line, we'll have some profits there. But your main business, which is the polyester film business, that itself is not very, very profitable of that size to fund this kind of capex. So I'm kind of assuming that at some point in time, you will come to the market for raising equity.
You see, the assumption making is your call. I cannot comment on that. And if necessary, we will of course have to come to the market. But what I'm trying to say is that we will do a prudent mix of internal accrual, equity and debt.
Our repayment obligation will reduce from April 19 onwards. So whatever profits we make, a very small portion of that will go for the repayments, cash profits that we will generate in the company.
So this year we have a repayment obligation of 44 crores, which we will meet completely. There is no doubt about it. And from next year onwards, our repayment liability is about 22 crores a year only.
So the EBITDA would be used only for repayment of 22 crores and interest payment. Balance all is retained in the company, so which will improve the cash flow and the kitty.
Sir, how much total capital employed is there in the specialty polymer business?
In the specialty polymer, capital employed is about, I would say, 60 crores.
Okay. And in the engineering plastic business?
Engineering plastic business, it is about close to 110 crores.
This includes working capital also?
Yes. Inventory and data.
Total capital employed.
So 110 plus 60 in the specialty polymer.
Yeah.
Correct.
Okay, thanks, sir.
Thank you. Next question is from Nishit Kishore from Tashi Securities. Please go ahead.
Hello.
Hello.
Yeah, am I audible, sir?
Yes, completely.
Yeah. Sir, as you mentioned in the Q3 Concall that revenue from a specialty business is going to be around 100 to 120 crore. But now we are seeing in Q1 that there is no major spurt in the revenue from a specialty polymer business. Like, I want to know what is going to be the revenue driver for this FY19 for Ester.
Well, it won't be 100 to 120 crores because we got the pushback from this large customer. So it will be lower. Now it depends on exactly how much volume we can expect to get from them, which we'll come to know in the next 3 to 4 months. But we will not be doing 100 to 120 crores in specialty polymer business in FY19. Okay, sir.
Then you are banking on just film business.
Well, film business is very large and is the largest portion in our portfolio. So certainly film business is going to contribute a lot in this financial year. But next financial year onwards, I'm sure that specialty polymers, with the work that is going on currently, as I've already mentioned, we are very hopeful that we'll see some major improvements in specialty polymers.
Yeah, okay, sir. Sir, as you mentioned earlier, that a specialty polymer business is the business which is very high margin business. And the margins in film business is a little bit low as compared to the specialty business and engineering plastic business. Can you throw some light on how much margin you are going to generate in this FY19 from film business?
From film business, we do about a volume about 55,000, 56,000 tons. And then we have some chip sales also. So margins have improved over last year, as you can see from the results. June quarter last year we had a loss.
June 18, the EBIT margin for polyester chips and film, because that is looked at as one segment, is about 50% EBIT margin on segmental basis.
Okay.
So this is likely to improve in the next following quarters.
Okay.
From 15 to...
We don't know. It depends entirely, but because it also depends on global demand supply. And but we definitely expect it to improve over the current margins that we are experiencing.
Okay, sir. So last question is, as the rupee is depreciating, how it is going to impact Ester Industries?
Positively.
For
a very simple reason.
Depreciating. Hello?
Yeah, see, we are an exporter, no? We export almost 30% of our, or 25-30% of our film production.
Yeah.
Positive or neutral? It is not
going to be negative to us under any circumstances.
Okay. And how so? Yes, sir.
Hello?
We seem to have lost the line for participant. We'll move to the next question. The next question is from Aman Santalia from AK Securities. Please go ahead.
Sir, my question is, how profitable is to set up a new BOPET film line?
You see, it's a growing business. Okay. The demand in India is growing very strongly at about 12 to 14% per annum. Capacities will have to be set up to meet this demand. And at the end of the day, demand supply decides the profitability of any business, whether it's polyester film or anything else. It is cyclical to a certain extent because of bunching up of capacities, but definitely overall in the long run it is a profitable business.
And sir, how is the international scenario, whether there is new capacities are coming up in the international market?
Well, not very large capacities. Only one capacity in India is expected in the middle of, one line is expected in the middle of next year in India. And we don't know of very large capacity expansions in the international market because China was the only country which was growing very fast in terms of capacity creation. But they have stopped completely. There is no capacity expansion coming up in China.
And so right now the international price is lower or is the domestic price higher? Which is where the price is lower or higher?
Please understand one thing, that in a global world without any boundaries, domestic and international prices are always, water finds its own balance. Water finds its own level. So we have to maintain our pricing at import price plus import duty. And that is a profitable price today.
Okay, sir. Okay. Thank you.
Thank you. Next question is from Kranti Vatini from Wealth Mill Securities. Please go ahead.
I want to know about what the prices of crude will have impact on your company.
Well, the prices of crude, the impact is the raw materials, because we are a petrochemical-based raw material and like I said, for us it's a pass-through. So if there's any movement in raw material, it passes through.
Okay, that means you are going to pass on to the customer?
Yeah. Our raw materials are passed through to the customer.
Okay. And on 29th January, you announced that Ester Industries have entered an agreement with Shah Industries. It's a long-term agreement, what the press release is mentioned. And the total tune of the size of the order was 900 million. So what is the progress exactly? Can you give some clarity on this?
I've already mentioned this in the previous questions that it was fundamentally a forecast given by them by the customer, and indicating that they will take about 2,000 to 2,500 tons. They started picking up some volumes in January, February, but after that they have held it back. They pushed it back. So we are not clear as to
how much percentage, how many tons during this season till date, how many tons you exported to them?
Well, only March quarter we exported to them.
Okay. Just how much percentage of how much percentage of the total order you have supplied to them?
No. Please understand one thing. Again, I'm saying that it was a forecast given by them. We started execution of volume against that forecast. They bought in the March quarter, post which they have not bought any volume.
Okay, they have not bought any volume from Ester Industries.
On March.
Okay. So what will be the revenue impact? Because the forecast was this order is going to have significant impact on your earnings over a period of time. So due to this loss of order, I can say, what will be the impact on your revenues?
I have already mentioned that we will not be able to touch the desired volume that we had said that we will be able to do. Okay. We will not be able to meet the target of 120 crores in specialty polymer business this year.
Okay. Thank you.
Thank you. Next, we have a follow-up question from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yeah, thank you for again. Sir, for the polyester film segment, what is our nameplate capacity?
About 60,000 tons is nameplate. We do about 56,000 tons.
And sir, the market share, and who is our peer comparison?
9 to 10%.
Our market share is 9 to 10%. And so who is the largest player in the segment?
Is Jindal.
Jindal Poly.
Yeah.
And they are commanding a market share of?
About 14-15%, I think. 15%.
Okay, then the market is much staggered. So कोई भी बड़ा player 15% के ऊपर नहीं है. Biggest is 15. So काफी scattered industry है sir.
5 to 6%. Largest would be about 15 to 16%.
Correct.
And there are 12 players.
There are total 12 players. In the listed space, we have two, only Jindal Poly and Ester.
No. We have Polyplex, we have SRF, Uflex, Karware.
So five players are.
Yeah.
Five players are there.
Okay. And the one who is coming up with a new capacity, and what is the size? Jindal Poly is coming up with a new capacity.
Yeah, about 36,000 tons.
36,000 tons. And
yeah,
our is 56,000.
Yeah.
And by middle of next year, 19.
Yeah.
Okay, sir. What is the debt on our books, sir, as on June?
Interest-bearing debt is about 290 crores as on 30th June.
290?
Yes.
And could be split up into the term loans and the working capital requirement?
Term loans is about Just a minute. Term loan is about 105 crores. Balance is working capital debt.
And sir, what is the average cost of funding? Interest
About
we have to pay?
10.5 to 11%.
Sir, could you split up for that for the working capital and the term loan also, sir? How much is the term loan?
Working capital is marginally lower than, let's say 10.5, and term loan is about 11.5.
Term loan is on 11.5.
Yeah, because term loan is all rupee denominated loan.
Okay, sir. And sir, where are our plants, sir, for the polyester? Uttarakhand. And then when is the... sir? Hello?
Khatima. Name of the place is Khatima.
Okay, sir. And when is the AGM scheduled, sir? Has the AGM already done?
24th September.
We are doing the AGM on 24th September.
Yes.
Right. And any further detail for plant visit and all can be is facilitated by the company, sir, if investors and analysts want to visit?
It's an individual based thing.
As a shareholder, you can...
As a shareholder, you're welcome to come.
No, just to understand the process and to have an idea of what kind of facilities we are having. So are we entertaining people?
We don't do guided tours or anything on a regular basis, but if any shareholder wants to visit, we are open to welcome them.
Correct, sir. All the best, sir. Thank you.
Thank you.
Thank you. Next, we have a follow-up question from the line of Mitul Mehta from Lucky Investment. Please go ahead.
What is the working capital in the polyester film business?
About 3.5 months, 3 to 3.5 month cycle.
Specialty polymer?
Pardon?
Specialty polymer?
Especially polymer, it all depends on the quarter to quarter changes depending on the volumes. So for exports, it could be about 45 to 60 days. For domestic, the only inventory is there because all the payments is on advance payment, sales is on advance payment basis.
And what about engineering?
Is needed in engineering plastic ranges, where we have a cycle of about 5 months.
Engineering plastic is how much?
Close to 5 months.
4 to 5 months.
Yeah. The company in totality, the current asset cycle is about 4.25 months.
Okay, thanks.
Thank you. That was the last question in queue. I would now like to hand the conference back to the management for closing comments.
Thank you very much. And we look forward to talking with you again after the next quarter results. Thank you for joining us.
Thank you.